After 3 straight months of unexpectedly hot inflation readings, several banks have scaled back their forecast for interest rate cuts. And recent commentary from Fed officials has supported the idea that policy adjustments, they could become later in the year, if at all. Now, economists at Citigroup are holding their call for rate cuts to come as early as June or July. Joining us now to discuss, Citi Economist Veronica Clark. And Veronica, thank you for joining us here today. You've probably been asked this question many times, but we're here to discuss it again. You're standing by your call. Just explain it for us, please.
Yeah, we have been asked that question many times, of course. So I think we maybe are some of the last people expecting that the Fed will be cutting. We have a base case for June still. It very well could be July. But I think the fundamental difference for us is that we really do see this Fed as having a more dovish reaction function. It's not that we see some magical slowing in the inflation data. If anything, we think inflation is pretty sticky. But we think this is a Fed that is looking at some of this labor market data, even survey data like we had this morning, the PMI services employment number, and really getting worried that we might be entering a weaker labor market, and really wants to prevent that.
So at the same time, what we seem to have heard from Jay Powell most recently is that the Fed was sort of willing to wait, or is that not how you took his commentary?
No, I mean, I think that most Fed officials are certainly paying lip service to this idea that maybe we don't have enough confidence yet. Certainly the March data, just as strong as we had in February, isn't giving them further confidence. And if that is the trend, if we did have consistently stronger inflation data, then you would have to wait longer. But I think the bar for what the Fed will consider more easing in inflation is relatively low. And it was actually a bit interesting to hear that Fed officials expect March core PCE inflation on Friday to be at 2.8% year on year. That's the same as it was in February, but that's actually higher than what we're forecasting. That's higher than a lot of other forecasts, and they might be delivered a downside surprise on Friday. So that alone might be able to give them a bit more confidence that year on year inflation is coming down, inflation is slowing a bit more.
That's interesting, and we'll keep an eye out for that on Friday. Just thinking about the two sides of the Fed coin, we talked about inflation. You also talked about the labor market and a couple of cracks that you might be seeing there. Can you go into some detail and tell us what we should be aware of and maybe alert for in the labor market if there are, in fact, some of these cracks appearing?
Yeah, absolutely. I mean, it is still true that, of course, headline job growth payrolls are running very strong. We really don't see the signs of big layoffs yet. Initial jobless claims, which we get every Thursday, are still very low. But we're definitely seeing indications that businesses are pulling back on hiring. We've seen that in survey data. We've seen that in the hiring rate in the JOLT survey. We'll get that next week. And so it is true that hiring has really pulled back. And markets today are reacting to a weaker services PMI measure for employment, and so all these signs that hiring is pulling back that could result in some weaker headline job growth in a not too distant future. In Q2 you really are expecting to hire a bunch of people, and seasonal adjustment. We know there's been issues with seasonal adjustment. We might be in for a weaker payroll print at some upcoming month.
And what about the PCE report on Friday? What are you kind of expecting there?
Yeah, I mean, we have most of the components of PCE inflation from CPI and PPI. We're expecting a 0.3 month on month. It's a 0.26 unrounded. That's the same kind of monthly increase that we saw in February. But it really is that year on year reading, I think, that's most important. The Fed is expecting that year on year inflation for core PCE is flat at 2.8%. We're expecting it comes down to 2.7. That's where the consensus is also. If that's true, then maybe for Fed officials, that looks like a bit cooler inflation than they were expecting.
Veronica, good to see you. Thanks so much.
Thank you.